Welcome to Thoughts and Discourses on Digital Transformation. Dive into a world of insightful conversations and profound ideas. Join us as we explore the latest trends, challenges, and opportunities in the digital age. Stay tuned for engaging discussions and expert opinions that will inspire and inform.
Okay, and welcome back to part two of application modernization and digital transformation with Beatrice Lion. We'll actually start now talking about tokenization and crypto, which is another area that her VC fund is looking at. And so the other area that you're looking at is more of tokenization. And I think, do you want to give like an overview of where you're interested is and your focus is and where you think that is going?
Yep. So apart from the AI application side, we also invest a lot in the blockchain space. And one of the area is tokenization that we have been very optimistic about from early beginning of the years in 2018. And this is not something that is new in terms of a technology. So one thing that has been sprouting quite a lot of traction now is tokenization of private market shares and even public market stock and equity positions. So a lot of financial instruments, tokenization of it. And this was something that happened already or came about already in 2018, but really only started to take more traction right now. So one area that we're pretty excited about actually was a major announcement also that is linked to this company. So we have this company called Animoca Brands. I can talk about it because the company has already announced it publicly as well. And we were working very closely with Republic, which is one of the also global market leaders in tokenization of asset classes. And they have already tokenized Animoca Brands equity shares on the Solana blockchain. And what is interesting here is that there's been a lot of tokenizations, and you've probably seen Robinhood doing tokenization of SpaceX or OpenAI shares, for example, but those were mirroring the shares, so they don't actually have the underlying shares being moved. It's actually just mirroring that shares. And the danger of that, and you saw it also in Link2's bankruptcy, is that when the creditors come in, what do I actually own? I just own the underlying rights and I don't own the underlying shares. So that's where it becomes a very major announcement where Republic actually announced that they are tokenizing Animoca shares because they're actually tokenizing the underlying shares itself. And just earlier this week on Monday, Animoca actually announced that they are going public on NASDAQ through a reverse takeover transaction with Currency Group. And it will definitely be interesting to see how that plays out in the secondaries market with the tokenized form of Animoca shares by Republic versus the kind of original dematerialized shares that they have on their share registry. So that arbitrage opportunity could be interesting as well from those arbitrage investors. That is another area. And the reason why we talk a lot about tokenized private market shares, it comes also very timely where NASDAQ also applied to actually issue tokenized securities on through the NASDAQ listed stocks. So what they could do is, for example, also tokenize NASDAQ listed stocks, which are already publicly traded stock. And you would argue, like, what's the point of tokenizing a publicly traded stock? It's already
Exactly.
liquid.
What is the point? All right.
Exactly. So the point is that today you can only trade it 9 a.m. to 4 p.m. Eastern time, New York time, right? But tomorrow you can trade it 24/7, 365. They can settle almost in real time, the same way you would have done it in buying and selling crypto, for example. It's on that level, on that scale. And that's completely simplified because you basically have all that contracts put in place in the tokenized form of the equity stock.
That's very similar to stable coins, right? So, part of the problem with doing, say, international transactions or banking transactions, right?
Yes.
You're only as good as when the bank is open. And so stable coins allow you to do a 24/7 market. So, do you think this is going to be one of the major use cases is really about offering 24/7 capability? And tokenization is the way to achieve that.
One of the things that I was looking at in stable coins was that, one day, and maybe it's hard to fathom it right now, but one day we could operate easily with just an entire ecosystem of stable coins, and we don't even need to go through banks or fiat rails. And maybe your wallet is actually your phone, where today your wallet is literally your phone with Apple Pay and all of that already, but also looking at, cross borders, even when you're looking at cash transfers or peer-to-peer transactions, cross borders from that point of view as well, that it is easily substitutable with stable coins, and those are already backed with a state currency, whether is it the US dollar, whether is it the euros. So there is definitely a use case around there where I do see a world that we are just only using stable coins to settle. And the other part around the stable coins that is also quite exciting, that I've been looking a lot into as well, is using stable coins as an instrument of settlement between agentic agents, agentic AI. So what that could mean is that if you have, for example, today an AI agent that is going to, help you with buying groceries, just to simplify it, buying groceries from the supermarket when your fridge immediately has a signal that you're missing certain ingredients, for example. And your AI agent is not going to be able to have a bank account and authorize transactions on your behalf with the current fiat rails. But what it could do, for example, with the stablecoin space, is that the AI agent of your fridge could settle with the AI agent of your supermarket through the stablecoin rails, which doesn't have to pass through the fiat rails. And I know that might sound like I'm talking about a different world right now, but I do really see that happening. And then I never have to worry about restocking my fridge. I'm just keeping it on a very simple layman idea. But the point is that that could easily happen for a lot of things that we don't want to do. We don't want to automate the payments, and then we have gyro. We don't want to automate like the purchase of groceries, and then we have AI agents helping us to do that with stablecoin settlements, and then we don't even have to hit the fiat rails. Until the day that the banks are willing to open an account for AI agents, stablecoins will always have that use case available.
Yeah, I think AI agents are going to take off tremendously, and hopefully, they'll get a bit more intelligent. But I like the analogy of having an AI agent do something in the background, right? Whether it's buying groceries, whether it's, whatever, just to make my life easier, right? And then the interesting thing is once they start interacting with other services, right? There's normally a payment form that's needed, right? Now, how do we enable that in a safe and consistent manner?
Mm-hmm.
So interestingly, doing with stablecoin is an interesting way about achieving that, right? So what do you think with tokenization? As a VC, as you're looking for investment, is there any other areas that you're looking at with on the blockchain that you think is interesting for startups to look at?
Yeah, I think the tokenization topic, but just to come back to that tokenization of private market shares, why that has become a bigger topic today than it was before is because there's been way more interest in private market shares and the trading of that. So I think that's a little bit where liquidity begets liquidity, and that's why tokenization becomes an area where you can make that process smoother. And I do want to give a quick call out in terms of the last 2 week events, given that it's so relevant in today. It's that last week, Morgan Stanley announced that they are purchasing Equity Zend, and just this week, one of our portfolio companies who's already listed on the New York Stock Exchange, Forge Global, they received, or Financial Times has announced that they are expecting this offer from Charles Schwab to actually purchase them. So there has been a lot of players in the kind of traditional banking space that have also seen that I need to get a foot in to target the kind of private market shares group, where I need to be close to whether is it Silicon Valley companies or global VC backed companies that are basically offering from the supply side, so that I can attract my core group of clients with more different products. So I do see that movement from the kind of private markets piece. But back on the tokenization part, not just the private market shares, we are also seeing that with funds, and actually in the credit credit market, there's quite a lot of activity as well. Recently, Securitize, again, another player, also a global market leader in tokenizing different type of asset classes, more on the institutional side. They have done, for example, most notably on BlackRock's funds that they have tokenized. But more interestingly, they are also actually heading towards $1.25 billion SPAC to get out of the also becoming a public listed company. And then when we come to the other topic, which is very relevant for us as VC funds, on the fund side, actually, one of the areas that TGV, True Global Ventures, actually thought about in 2018 was that we wanted to tokenize our fund ourselves. And in the very early days, there were basically very little VCs that actually tried to do that. I think one of the successful ones was Spice VC, and Tal, who is a good friend as well, and we really respect what he has built with Spice VC, basically tokenized his fund such that there is liquidity for a very illiquid asset of early stage venture investing. And one of the areas that we're definitely thinking about with our funds now going forward is that after the investment period, it is honestly quite an interesting reason for us to tokenize so that we can create liquidity amongst our 240 LPs, and they can buy and sell their stake of the fund within that without having to take up GP time to actually help facilitate that, while looking at deal flow, trying to materialize distributions and looking at exits. And instead, this could be automated just by tokenizing your fund and having it in a smart contract to trade between. So I definitely do see that is a next leap as well that could go into for funds, even if it starts from the later stage type of funds all the way down to the early stage type of funds. And of course, not during the investment period when you're still deploying. When you have a base of assets, then it's easier to have price discovery. And then that's when tokenization of the fund itself really makes sense. Tokenization doesn't solve a demand and supply issue. So demand and supply has to be there. Tokenization is a technology that enables that to be a bit more transacted and settled in a more seamless manner. So it does accelerate the transaction finalization of that, and it does encourage distribution, but you have to have a demand and supply there. So there's been a lot of early entrepreneurs who started to look at tokenization of real estate, for example. And my opinion, why maybe I'm wrong, but my opinion why that didn't fly is that you can't create a demand and supply when it's not there. Maybe the supply there was not attractive enough for the demand.
How do you see the regulatory landscape with the tokenization of these asset classes evolving, right? Are the regulators excited about this because it makes auditing very simple or easier? Or are they very concerned about this?
In the US, unfortunately, it's still very linked to the administration, but this current administration is definitely in the favor of innovation, in the sense that they're definitely willing to test it out. And honestly, from a regulatory point of view, it's definitely a need and not an option. Like when we look at having distribution of securities and asset classes, of course you should get the right regulations if you're going to distribute it to retail as opposed to just accredited investors or professional investors, for example. So regulation should not be forgotten just because the technology has come about. But at the same time, regulation should not stifle technology innovation in a almost overbearing way. So I mean, if the fact that you're just not wanting to allow for tokenized stocks on NASDAQ, for example, for the pure sake that you're afraid about touching crypto, then that's completely the wrong concept, because it's not the fear of crypto that is going to basically prevent your stocks from trading well. It's the education within the investors that are purchasing all of these asset classes. So then you're going about regulation from the wrong way, because you're stifling the innovation and not allowing for access or not allowing to improve market perfect market information, just because there's less educated investors that are maybe also looking at accessing this space but just require the education to get there. So I think there's a differentiation between the responsibility of regulators, where is it a matter of you're protecting the consumer who is less educated, or it's a matter of just because of a certain taboo around the industry that you feel that you don't want this innovation to go about.
Okay, so we're about out of time. So, Beatrice, any last thoughts that you have? Maybe you can summarize where you think the future is going to be with AI and then with tokenization and blockchain.
Yeah, no, I'm very excited about this future. I really want to be in this space at this time right now. I think, there's never a better time to be alive if you're very interested in investing into AI applications and in blockchain, because I do see that we're going to grow the next kind of generation of the Amazons, the Metas, or the Facebooks again right now, or the new Googles right now, with the innovation that we have. And we're going to see more and more problems that are being solved with new innovative cases. So honestly, there's really never a better time to be really investing in this space and learning and being educated about it. So definitely excited for a lot of our companies and their potential in this market too.
Okay, well, thanks so much for joining the podcast this week, and look forward to talking to you and seeing you in person the next time you're in New York. Okay, bye.
Absolutely. Thanks, Colin. Bye bye.